Hi, it's Michael from McLeod. What I wish to do today is just go through how you do an interim period. Now, these are done when someone is doing a member withdrawal of some form or other, usually a lump sum withdrawal, could be for COVID reasons, or they're starting a new pension for themselves. Then you often need to do an interim period to calculate a balance as at the day before they start the pension. Also in this case here, obviously this particular Fred Brown, he's actually just about to turn 60 and he wants to start his pension on the 2nd of the 1st, 2020. So before you actually start the process, you need to make sure you've entered all transactions up to that date. So of the 1st and of the 1st, 2020, I would recommend actually that you do all the transactions for the year and then you do the interim period, especially if they have some form of trust distributions where there's a tax statement. So firstly, you go into periods and then select interim periods. Now, because Fred is starting his pension on the 2nd of the 1st, you do the interim period from the 1 July 2019 through to the 1st of the 1st, 2020. And you click on Save. This will then take you to the valuation page. And obviously you need to do a valuation for the investments. As you can see here, these are the valuations of the stocks and the ETFs as at the particular date. So you can probably accept those, but obviously in this case, the actual date here for this date was actually 128. So sometimes with managed funds and those sort of things, you just need to get the best possible valuation for you. So sometimes not all managed funds have daily valuations, but just try and get the daily valuation if you can. Then you click Save Revaluation. And that will determine the asset valuation as at the 1st of the 1st, 2020. Then you start for the next process is calculating interim tax. So the first thing you need to do is you've got various things here. If there are capital gains or interim income and interim trust distributions. So with interim trust distributions, again, I would suggest you do some type of apportionment of the amount for the period. So in this case, it's virtually 6 months. So you could sit there and say, well, 50% of these figures in the actual, in terms of this tax statement you get, we would include in this section of the actual investment. It's not necessarily completely accurate, but it's probably as accurate as you're going to be. So in this case, we knew that obviously there was 2,300 of taxable distribution. There was a $500 imputed credit, and also there was some capital gains of $500, but also of this we're going to include $250 here. And then you click on, obviously in this case, Save. And then we add another one, which is for the other fund here, which is my managed fund. Now, obviously, in this case, there was the 50% share was $1,200. There was no imputed credits, but there was a capital gain of $100, of $200 for the year, but also we're just putting down $100 here. Now click on Save, and the next section is interim capital gains. As you can see here, the interim capital gains from these distributions have come through, and it sort of works out the concession and works out the taxable capital gains. Now, on each of these pages, you click Save to accept those figures. Then we go into interim income. And also you can see here the net capital gain, there's the gross interest, there's the franked dividend amount, and these are the dividends received up to the 1st of the 1st, 2020. And obviously the amounts we put down for the gross trust distribution. And the total gross income is the 41,444. So again, we click on Save Income. Okay. Just click not applicable there. Save Income. Then go to Interim Deductions. And again, here we've only got insurance premiums here and the Smurf levy during the year paid so far. So obviously, again, you just save deductions here. Obviously, as I already remember, was in pension phase. There might be some ECPI here, but obviously in this case, the other member is not in pension phase. Obviously, get to the interim taxable income, and obviously this starts working out, the tax as at that point in time, and obviously the 5327 of refund. So there's obviously the gross tax, and then there's up here, and then there's obviously some imputation credits as well, which reduce it to a refund. Click on Save Income Tax. Tells you they're going to post a certain amount of tax to the general ledger. So now we've got interim losses. Obviously, aren't any losses here, so we can click on Save Interim Losses. And the next section is starting to distribute the tax. So basically here you see Fred's got 6% of the fund, and obviously Carol Smith has got the other percentage of the fund. So then click on Allocate Interim P&L. And then we go to the contributions tax. There wasn't actually any contributions tax this year, but obviously if there was, that will be allocated as well. And then we go and allocate the interim tax. And again, it's just showing you how much of the tax is going to be allocated to each member. And then we go into allocate all other transactions. And then we click process all other allocations. And there's some life insurance premiums which were allocated to members here. And obviously tells me it's been successfully allocated. Then you post the entries. And what we do here is we do the interim entries here. And now that's done the process. So in terms of doing the interim periods, you've now done the interim periods. So that's the end of this particular section. We'll be doing another one on starting the pension, but that will be a separate a video tutorial. But thanks very much. Bye.